Symbotic, which is a leader in AI-enabled robotics technology that helps supply chains like warehouses improve operations, reported quarterly financial results after the markets closed on November 18th, 2024, that are sending the stock price soaring by over 20%. So I'm going to review those financial results and update my recommendation for Symbotic stock. I mentioned earlier that the stock price was up by over 20%. Well, I'm happy about that because I've had Symbotic stock rated as a buy. And so those of my viewers that followed that recommendation made some money on that, and that makes me happy. So I'm going to review these results and then update that recommendation and let you know if I still think it's a buy or if I think it's time to take profits following these results. So let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So for its quarter that ended September 28th, 2024, Symbotic posted revenue of $577 million, and more importantly, it hit the inflection point of profitability on the bottom line with net income of $28 million. In the same quarter last year, Symbotic had revenue of $392 million and a net loss of $45 million. So revenue improved by almost $200 million year over year, and the bottom line improved by over $73 million from negative 45 to positive 28. Huge improvements here for this innovative company that's helping companies like Walmart, which is one of its biggest partners, in automating its warehouses with robotics technology. And demand for its services are likely to increase going forward for the next decade or more, probably more than 2 decades, as labor shortages worldwide are hurting companies like Walmart. And then on top of that, it's more difficult to manage a business with more employees, especially when you're the size of Walmart. You're already dealing with close to 2 million employees. So it's a strain on your company's management. It's a strain on the human resources. Difficult to operate that size with that magnitude. People call in sick, people quit, people want a raise, people don't show up for work, etc. Whereas if you can automate these processes as much as you can, right? You can never automate everything. You can never have robots completely take over and do everything that humans can do. And in most cases, in a lot of cases, humans are better at many of these tasks than robots. But anytime you can add these robotics incrementally and help the business, it really helps facilitate growth, especially at this scale. And so Symbotic, its demand is growing, and you can see that in their deferred revenue numbers. You can see that in these growth numbers. And I don't see a end to this growth for this company in the near term. The CEO said that I'm pleased with our performance this year. Our focus on innovation and customer success has delivered robust growth. This was driven by the hard work and dedication of our team, and we're going to continue to strive for sustainable long-term growth for our shareholders. We look forward to building on this momentum and continuing to deliver exceptional results. And they have done a good job in building the business profitably, as you can see, net income on the bottom line and still robust growth on the top line. I really like to see that, especially with these innovative growth stocks. When they're growing the top line and the bottom line simultaneously, that's really great to see. It's rare where these companies with this much runway, this much growth potential, are already generating profit on the bottom line. The CFO chimes in here and says, we are looking forward to the first quarter of our fiscal year 2025. We expect continued strong top-line growth with stable gross margins, along with targeted investments to capture an expanding set of opportunities. That's nice to hear. The CFO saying that we continue to expect strong top-line growth with stable profit margins, and we're going to invest because we're seeing a growing set of opportunities. So not only were there opportunities large to begin with, but they're seeing a growing set of opportunities ahead. Looking ahead, they are forecasting revenue of $505 million at the midpoint in the fiscal first quarter and adjusted EBITDA of $29 million at the midpoint. That compares with revenue of 577 million in the recently completed quarter, with adjusted EBITDA of 55 million. So the company is expecting a incremental or sequential decrease in revenue and adjusted EBITDA for the upcoming quarter, but that shouldn't be alarming for Symbotic stock investors. The company has a revenue recognition process where their revenue is based on contracts that they signed years ago, and they have a strong backlog of orders. And so it's a matter of them completing these orders, working on finishing these tasks so that they can then count those orders as revenue, because they can't count an order as revenue until they complete whatever service was agreed upon in that order. So their results are more indicative in the upcoming quarter is more indicative of the company's rate of completion of these tasks, which they are trying to get better at. They're trying to get better at completing these warehouse upgrades with robotics technology. They're trying to get faster at completing them. It's not an easy thing to do, as you might imagine. It takes them a while to complete these projects, and they're trying to get faster, more efficient at completing these projects. And with more experience, they will get faster. So, like I highlighted, the stock price is up over 26% on the day after the company announced these excellent earnings results. Of course, I've had Symbotic stock rated as a buy. I last updated that recommendation on October 1st, reiterating that I still thought the stock was a buy. I've had it rated as a buy all year long here in 2024. I've liked the company's growth prospects while also improving profitability on the bottom line. And it had been selling at a reasonably good valuation, especially earlier this year where the valuation dipped and you were able to get this stock at a very low forward price to earnings ratio, closer to 30. It's now risen closer to 50 than 30, but still, if you look back at the last 3 years, this is just about the lowest valuation you've been able to buy this innovative robotics technology stock. So, to update my recommendation, what do I think? Do I still think it's a buy, or do I think it's time to take profits? I think it's still a buy. I like that the company hit that inflection point in profitability on the bottom line, robust growth expected ahead, and I don't think this company's growth rate is going to, well, the growth rate might slow down, but the runway for growth, the availability, the total addressable market opportunity for Symbotic is huge relative to its current revenue generating capability. Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.